couldn't hold the 1900 technical level. We talked about it, came down to the 200 MA. Now we're fighting down here, Frank. We're definitely fighting for some support. You've got wicks down here around this 1820 to 1830 zone. There's a bunch of price action that I'm watching here, but what are you seeing here in gold?
Right now, it's going to be a real tough sell as a buyer. I'm like a lot of folks, I don't really trade, swing trade gold, and I generally look at it from a bullish perspective and not a bearish perspective, at least, as far as making moves is concerned. But a couple things that do have to concern you. I mean, obviously the failed break, last week, there's no way to positively spin a failed breakout, right? So we have worked back into support. Matt and I were talking in the pre-production, kind of dancing at that 200-day moving average. It looks like we are going to close below that for the week. Anything's possible. There's still some time left, but it's looking that way. We do have the 50 weekly at approximately 1800. And so, as Matt has brought up a lot before, the 50 and the 200, they're not necessarily in the exact same place, but they kind of behave the same way. Is that fair to say, man? I want to put words in your mouth.
Yeah, they're not the same mathematical algorithm, obviously.
Right, but it's kind of a zone,
they're always
I guess.
in the zone, right? I mean, you're talking, 50 weekly would be how many days?
Oh, don't make me do math. Didn't I already say you don't want to see me do
math
live?
there's not a discernible difference between the two. Mm-hmm. But when you will see certain environments where they separate themselves a little bit more than historically they do. And so my question to Frank in the pre-production show was, at what point do you consider a violation of the 200-day moving average an actual violation of the 200-day moving average? Because that moving average might look like a finite little green line on a screen somewhere, but that is a massive battle zone, right? That is a zone around that area. And when you have the 200-day moving average right there at 1845, and if you'll go to a weekly chart, you'll see the weekly, 50-day moving average, which is the one you're really looking at here. Where did it bounce? Like for example, when we saw the violation of the 200-day moving average last time, where did we find support technically? On the 50 weekly.
50 weekly. Yep.
When you saw the violation of it back in March, where did you find support actually? On the 50 weekly. And so very similar today, we're seeing that violation and the continuation of that violation. And nobody's got to like what we're seeing in the short term in gold, obviously. But when you're seeing that, at what point do you say, okay, that is a violation of a major support level that I need to be a little bit more concerned than I currently am on, right?
Yeah.
And so you got that weekly right there at 1800. You got the daily right there at 1845. How much credence are you going to give on the violation in the 200-day moving average when you have that 50 weekly right underneath it, Frankie?
It's a really tough question, because you do have to ding it for the close, the closing below the 200. I think you have to ding it, but because we're still above that 50, I don't want to ding it too hard, because I know that somewhere in that zone is really, everybody's going to have their own 2 cents on it, right? Especially on a product like gold, they're going to have their own 2 cents on it. So I think, you kind of give it wherever you might have been, I'm going to ding it 1, and then I'll ding it another if it breaks the 50. I think the real ugly thing, and this is just my personal opinion, the break of the 50 weekly would be worse than the break of the 200 in my opinion.
Yeah.
But that break of that 1775 pivot, that's where I'd say, we have no buyers that want this product. That's really concerning. And so I think the proper way to think about it is from a risk perspective. If I own some gold, whether it's, GLD or gold stocks or something I'm cash flowing, whatever the case might be, is to think in steps as, hey, if I expect this to come to 1800. Those are my personal expectations. And if that 1800 breaks, I expect that it's going to come to 1750. Those are my personal expectations. Whether they're right or not, they're still my expectations, right? And am I, where would I want to, maybe, buy that protection or roll that contract or, just close out of the position altogether if that's, the way I'm looking at it. So instead of having a hard line in the sand. I guess for me, the hard line really would be 1775. I guess to answer your question in the purest format, that would be my line in the sand. But I think I would look at it kind of in phases. If this breaks, this 200 giving out, we should come to that 50 weekly. If that breaks, that's going to make me a lot more worried, and I expect it to get to 1775. And if that breaks, it's not great technically.
I think you're in that walking down the stairs mentality right now, and you're finding the support, right? You violate the 200, you're looking at 1800. You violate 1800, you're looking at 1760 by 1750. When you violate that, you're looking at 1700. Underneath 1700, you're looking at, well, I might be wanting to do something else here. So I get what you're saying there. It's a tough position for gold. It's a battle happening. I know most people have picked their sides long term, and with the amount of money we're going to be pumping into this, I think long term is really, really good. I just think in the short term, we gotta wait to see who's going to win this short term battle. I love 1800, by the way. Love
that
1800.
Should be. I mean, it's a big round number. It's the 50. I mean, that would be that should be an appealing price. And we'll hopefully be able to see it as it develops, because we'll kind of establish that support level. We'll see these shorter term moving averages like the 90 MA start to flip around, right? We'll do things like set up higher lows. So, if I'm looking to add to anything here, I mean, patience is the name of the game. As always, right? It always should be, get exactly what you want to see. But this chart definitely needs some development. It's very hard to paint a super rosy picture in the very short term, I think.